Well, let's get across the auction results from over the weekend. Nationally, 1,760 auctions. You can see the clearance rate there just coming in a tick under 57%, which is down from last week. In Sydney, there were 650 auctions, a little lighter than usual. The clearance rate here, look at this, 54.2%. There were also more than 1,500 private sales across New South Wales. So that result there is a bit of a surprise. In Melbourne, 645 auctions. The clearance rate here is 62.5%. Also a little lower than perhaps average. There's also another 1,153 private sales across the state. Moving in Brisbane, 90 auctions. Clearance rate here is 62.2%, and across the state, just over 1,000 private sales. In Adelaide, 71 auctions. Clearance rate here is 81.7%. Still the hottest market in the country, and another 326 private sales. In Canberra, 50 auctions, 68% of those were cleared, and 111 private sales. And in Perth, just a couple of auctions and 625 private sales across WA. So around the country in June, home prices again were at record levels, led by Perth, Brisbane and Adelaide. There are some patches of weakness, notably Hobart, Canberra and parts of regional Victoria. But REA Group's PropTrack says the pressure for home price rises is not abating. Eleanor Creagh is a senior economist at REA Group and joins me now. Eleanor, always good to chat to you about this. So, let's go through the actual numbers. There is no discernible weakness except in some of these markets anywhere around this country because supply and demand continues to be out of whack.
Yeah, I mean, you're exactly right. We're really continuing to see that it's that strong demand story facing into pretty tight supply or constrained supply of housing, which is continuing to fuel both higher home prices and higher rents. So we saw that national home prices lifted by a further 0.18% in June. Now that brings them up around 6.5% on levels seen in June last year. So continuing to record a pretty strong pace of home price growth. Performance is a bit mixed across the various capital cities, but some capitals, for example, Perth, still really leading the way with that streak of outperformance. Prices up over 22% in the past year in Perth.
Which is phenomenal because the tightening of the housing market, though, as we talked to Warren Hogan about earlier on the program, also feeds into the inflation story in Australia. Now, the fact is that we saw this even in the past year with, accommodation, housing, basically being one of the prime causes of ongoing sticky inflation in Australia's economy. What you're saying right now is that is not abating anytime soon.
Yeah, certainly. I mean, it's tricky for the RBA. We know their mandate is not house prices, but we are at the same time seeing that higher housing costs, so higher rental prices and the like are continuing to feed into inflation and that stickiness in price pressures that we're seeing. And it's a bit of a difficult scenario because we know actually increasing interest rates further probably isn't going to abate that pressure. We know that high financing costs have been one of the contributors to the dent in new supply and the deterioration in the number of new projects that are feasible at the moment. So actually we could see that increasing rates further from here potentially has the opposite effect, particularly when it comes to higher house prices and rents when we look at that supply environment, because it's really supply that's the fix here.
That's the key. But it's actually Melbourne and Sydney that are probably, if anything, showing some signs of weakness. If you go, as you point out, to Brisbane, Perth and Adelaide, super duper strong. But in many ways, it was Sydney and Melbourne that led the prices up. Now they're the first ones that are maybe showing some sense of tapering off from the very high growth they'd previously seen.
Yeah, so we saw home prices in Sydney lifting by 0.41% in June. So still a pretty strong pace of price growth and up a little over 6% over the past year. But certainly the pace of growth in Sydney is beginning to slow. It's Melbourne really, though, where that price momentum is weakest. So we've seen that the recovery in Melbourne has lagged Sydney and Brisbane. So both those markets have recovered all of 2022's price.
But then there's something else about Melbourne. It's actually produced more houses. So its building has been much stronger than other parts of the country, which means it has had a supply response.
That's exactly right. So I think that's the critical picture here is the fact that we've seen less under construction relative to population growth in Victoria. Of course, we know that higher property taxes are also playing a part into that weaker price growth momentum in Melbourne. And I think simply the fact that buyers have more choice. So we've seen that the number of listings in Melbourne on market, so total stock on market has been above prior decade averages since about mid last year. So very different conditions in Melbourne's housing market, and we have seen that prices have fallen in Melbourne for the past 3 months straight. So certainly weaker growth momentum in Melbourne.
It's probably a more normal market, you would imagine, than maybe some of those other ones. Eleanor Creagh, always good to chat to you. Many thanks for your time today.
Having me.